It's time to join Montana's very own and your voice for agriculture, Talkin' Ag Lane Nordland, for today's Lanecast.
Hey everybody, welcome back to the Lanecast Ag Podcast here today. And as we make our way through the summer of 2024, producers are busy out in the countryside. We are getting the grain harvest wrapped up in my neck of the woods, and folks are trying to get their calves contracted, but of course they're kind of watching those financial markets here right now. A little bit of a concern there for a lot of cow-calf producers that have not yet contracted their calves, but we'll save that conversation for another show. So we just want to thank you for joining us here on the Lanecast Ag Podcast. And today I just want to give a big shout out to our friends at Bank of the Rockies. They go above and beyond. They're actually bringing you today's agriculture conversation. And we're going to really talk about the Farm Bill. And yes, we don't have a Farm Bill. We're a year behind on a Farm Bill, but really what that Farm Bill does through the lens of lending and agriculture lending, to be specific. And excited to be joined here today by Ed Elfmann with the American Bankers Association. He's Senior VP of Agriculture and Rural Banking Policy there at the ABA. And we're also joined by Heather Malcolm, Vice President of Ag Lending at Bank of the Rockies, the oldest bank in Montana. First off, I want to thank both of you for joining us here today as we look at a farm bill. And I know there's a lot of what ifs right now with farm bills, but Ed, I'll welcome you first. How are things going here today as Congress is taking part in their August recess?
Yeah, so the whole process is always really interesting, to say the least. Jokingly, the opposite of pro is con, and the opposite of progress is Congress, right? So we're in an interesting place right now trying to get Farm Bill done, and look forward to really digging into it today. From an ABA perspective, 80% of the banks in the United States have agriculture in their portfolio. So when you start looking at the size and scope of ag and what it means to banking, it's such a massive thing to have a farm bill go through and try to make sure that we're able to help our producers and that they're able to weather storms that always hit, right? It's just a matter of how bad and how long in a lot of ways. So as we look at Farm Bill and where it's going, I'm really looking forward to the conversation and breaking down where we are and what it means for everybody.
Well, Ed, thanks for joining us here today. And as I mentioned, Heather Malcolm joins us here today. Heather, again, summer's going by. We are seeing some of these video sales take place. We have a few more left. But how are things in your world of ag lending in the state of Montana here this summer?
Well, this summer's been pretty good. We had a little bit of drought, but now we've gotten some rainstorms. Hay's been pretty good. Crops are looking all right in certain parts of the state. On the Farm Bill front, we're really excited to see the updates in the credit part of the Farm Bill, which can help our guaranteed loans as well as some direct loans, which really will expand our ability to help producers weather the lower commodity prices, mostly on the crops, because the cattle market is doing really well compared to a few years.
And how are things looking on your family's home place, too? I think maybe share a little bit about your background growing up in production agriculture, being involved, but also being very active in the state of Montana and on the national level with ABA as well, being a voice for your fellow lenders as well.
Our place is looking pretty good. We've gotten enough rain. The hay's good. Like Lane mentioned, I grew up on a cow-calf operation south of Livingston, and now I'm still involved in the family operation between Livingston and Bozeman. Still a cow-calf operation. We sell a few registered bulls as well, but it's all ties into being able to understand ag blending. I find that people that have an ag background are definitely more, they know more about when they're talking to their producers. It's not just somebody sitting behind the desk just looking at numbers, but understanding the actual ins and outs of the operation because I've done it and I understand it. And it sure helps a lot.
Yeah. Well, thanks for that little bit of a preview into your background in production ag. And Ed, for yourself, maybe share with our audience more of your background being in the Midwest there and growing up in agriculture as well.
Yeah, so I grew up on a dairy farm in Minnesota. So jokingly, that's why I do policy for a living now. Anybody who's ever milked cows in a stall barn is trying to figure out how to get out as fast as they can, it seems. But we still farm in central Minnesota. We're corn and soybeans with steers. I think your Montanans would disagree that we call them steers because they're Holsteins, and I know you all have a interesting relationship with Holsteins, but tell you what, you pump them full of corn, they do pretty well on a feedlot in central Minnesota. So we're gonna continue doing it that way for as long as we can. Prior to being at ABA, I was on Capitol Hill for a member of Congress on the House Agriculture Committee. Worked really probably the most on the 2012 Farm Bill from a congressional staff standpoint. Some of you remember that Farm Bill didn't work out so well, so I apologize, but I also don't take blame for how it turned out. That was the first attempt to separate the commodity programs from nutrition in 50 years, and there's a reason we don't try to do that. We learned the hard way that it didn't work, right? Prior to that, I worked at the Department of Transportation, working on actually in the research area. So for those of you who are Jeff Foxworthy fans, if you remember the story about shooting a chicken at an airplane, I worked for that agency that they were really testing what airplanes could do and stuff like that, running trains into barriers. It's kind of the neat side of Department of Transportation. And before that, I was with the National Corn Growers Association. And yes, folks, there is an association for everybody in DC, especially on the ag side of the world too. So have a kind of interesting background. And I think what's fun, having worked with Heather over the years when she was chair of our Agricultural Bankers Committee, a lot of our bankers in the rural space come from farm families or are still farm operators themselves, farmers and ranchers. Our current committee, 13 bankers on there, I think 12 of them do something in agriculture outside of banking, whether it's running 3 or 4 cows or one guy on our committee actually runs a couple thousand acres with his son, and in addition to banking. So we have very real world experience when it comes to agriculture. Our folks are feeling the same things you all are. And for me as a policy person, it's nice to be able to fall back on my farm background when we're talking to policymakers and how it really affects them day to day, and actually probably keeps us out of the partisan fights a little more, because at the end of the day, you're trying to help producers move forward, less about what party's winning what. And that matters when it comes to DC.
Yep. Well, Ed, you mentioned Holsteins, and so funny. We have some neighbors across the road from us that moved in from out of town, and they have a few acres, and they bought some Holstein steers, and they've had them for over a year and a half, maybe coming 2 years now. They're getting pretty big, but my daughter, she's turning 3 here in September. She looks at them just like, and in her mind, they're just dairy cows because she has her Angus and Hereford cows out that, of course, that they're all hers in her opinion, but she's skeptical of them too. But that Angus cross, everything like that, they play a big part in production. So I'm not going to criticize Holstein steers and beef production too much here today. So
it's the future. I mean, it really says a lot about agriculture to me that you're seeing those crossbreeds happen, and you're seeing it. Just, I guess what it's saying about agriculture is how innovative we are, right, in agriculture. And that, I don't think we get enough credit at times for how innovative farmers and ranchers really are. They're trying to figure out, these dairy farms were basically 50-50 and they're having way too many bulls come out. So now they started crossbreeding, figuring all that out. And it's really kind of a neat thing to watch, because it's, crop side has done a lot of innovation, but now it seems like the cattle side is starting to catch up on their side of it. So it's been fun to watch for me over the last 30 years. It's a long way from stall barn dairy and whatever you get, right? And it says a lot to where the industry is going and what I think is going to happen long term.
Well, on a totally different note, it's either Michigan or Minnesota. I saw they've partnered with an Ontario milk distillery this week to launch an ethanol plant. I believe it's the Michigan milk producers. I had it on air. I just too many headlines here today. And they're going to take milk permeate and turn that into ethanol. And so not only is it going to be like corn ethanol, that's another I mean, I was amazed by it. I'm going to definitely do more research than just the AP rip and read. But again, a lot of innovation out there. We got to find ways to be profitable. But we bring up profitability in agriculture, and the Farm Bill is one of those tools to keep producers in business, keep USDA funded, look at different ways to expand agriculture, whether that's here in the U.S., trade opportunities. Again, there's a lot of challenges in passing any type of legislation, but a farm bill is always a challenge when you have farm programs and nutrition programs. And as I mentioned at the beginning, we're still operating on an extension of the 2018 Farm Bill right now. We will see that expire at the end of September, and most likely another extension of that. Ed and Heather can share their thoughts on that. But Ed, I'll start with you first. I mean, how important is a farm bill for ag lending? And when we look at that, I think sometimes we focus maybe on those farm programs and the nutrition title so much, but when we look at ag lending specifically, how important is it for the success of our rural communities and banks and thus the prosperity of our producers with that farm bill?
Yeah, so one thing for everyone to always remember in a farm bill, there are 12 titles. One of those titles is credit. That should give you a pretty good idea of how important it is to the credit side of the world. That entire title is devoted to that topic. So from a banking standpoint, there's a couple things that we get out of a farm bill. One is risk management, right? So most commonly crop insurance, right? Every crop farmer knows crop insurance, and most of them participate, to be honest. But there's also other insurance programs. There's insurance on dairy. There's the pasture insurance program. I mean, there's a lot of things out there. We personally, on the banking side, wish there was more. We love us some risk management. It does a lot of good in our world because it helps keep down your costs. It helps keep things in line, has your interest rates a little bit lower just by having that risk management behind things. So that's one side of it. Another side is the disaster programs and things that exist. The Farm Bill sets up disaster programs, making sure that you can get those payments, whether it's an ad hoc program or whether it's set up as more of a long-term setup. Those programs exist as well. And folks, we work in an industry where unforeseen circumstances happen all the time, right? It's just the nature of the business. It's not like owning a Western wear store where you're going to have consistent customer flow, and if it rains, you're still going to get customers. You might get more. In agriculture, it rains too much, it doesn't rain enough, and you're hosed either way, right? So you have to make sure you have those disaster programs. And you notice I haven't even gotten to the lending programs that exist yet, right? All the lending programs, the USDA guaranteed loan programs, the direct loan programs, that's just on the farm production and land ownership side of the world. Then you also have the rural development programs. So if you want to get a small business going in a rural community, rural development programs are really good for that. Or you want to create vertical integration on your operation. The rural development programs are great for that. So you start looking across the board, I figure that seven or eight titles in the Farm Bill affect lending in some way, shape, or form. And I can't even say the nutrition program doesn't, because there are aspects in the nutrition program that affect lending. Not in the way you would all think. It's things like card routing and how the SNAP benefits cards are used, and things that don't affect lenders per se, but affects members of ours that participate in those markets and provide the cards and do things like that. So literally every aspect of the Farm Bill affects lending in some way, shape, or form. It can make our jobs a lot easier, and it can also make our jobs a lot harder at times, depending on how the programs are structured or how they correctly get changed and some of those things. So at a high level, the Farm Bill matters tremendously, and we're supporters of getting it done. We really are. We want to see it move forward. We want to see the Farm Bill get done, and we can get into a lot of that today. And I'll try not to pontificate too much, but from that side of it, vastly important. And I'd like to hear the banker's take too, because she's been around me long enough on this that I think we're in lockstep on a lot of it.
Yeah, Heather, your comments?
So I think Ed touched on it briefly. It's always good to see the enhancements in the Farm Bill so we can help more farmers and ranchers stay on the ranch. So one thing that we've seen is exiting of the industry, and it's harder for beginning farmers and ranchers or young producers to stay on the farm or ranch these days. So the enhancements in the Farm Bill will help the lenders help those producers more. For one thing, like the guaranteed loan limits right now, that's at $2,236,000. And at the new Farm Bill, I think it's at 3.5 is what we're asking for. That would help a lot more producers, especially in Montana, because we've seen the prices of ag real estate and real estate in general increase so much over the past few years. It's really difficult to buy an operation that's going to be profitable, or buy land. So I think with that increase in the guaranteed loan limit, it's going to help us help more people. Like I had a customer the other day who expanding their operation, young farmers, and we got up against the guaranteed loan limit. So we had to come up with a different structure in order to make it work, where the bank's going to do part of a loan not guaranteed, and then the rest of it's going to be guaranteed, so that these producers can get this property. They have a great business plan. They have great risk mitigation. They're good customers, but we need a little bit more on those guaranteed loan limits so we can help the customers out more.
Yeah, and I think we could spend an hour just discussing that, Heather. And maybe we
Yes.
will down the road. But yeah, late last week, USDA released their land values report, and specifically to Montana, rangeland they said is up 0.9% at $890 an acre. I wish I could find some $890 pasture land. I don't know where they're pulling that number from. I mean, I'm glad it's not as high as Idaho, which is at $2,310 an acre, but there is pasture land selling for that here in Cascade County where I live. So again, there's so many challenges, especially for that next generation or that first generation to come in. Heather, we all know we're seeing input costs, farm debt rising. People are seeing us, especially when we're sharing prices for calves right now. We really can't say they're record high, because inflation needs to be factored into that. So there's a lot of factors that are impacting just profitability in the agriculture sector here right now. So when we look at the Farm Bill and your work on the Ag Committee there at ABA, what are some key things that the Ag Committee has worked on, and Ed can jump in too? As you mentioned, you're making requests, you're working with legislators to get this language and to get these expanded levels into the Farm Bill. I guess, what is that process like, and what were some of those key things that the American Bankers Association wanted to see in the Farm Bill when we're looking at the lending title?
I think a lot of it goes to working with FSA under both the guaranteed and the direct programs. We had a lot of meetings with the administrators over there at FSA with those programs. A lot of the risk mitigation, so crop insurance, the LRP that came out now, a lot of those things we had meetings on. Also the rural development leaders, so we can have business and industry loans in our rural communities. So a lot of those things were what we worked on, and then Ed can go into more details.
Yeah, what are some of those, I think people think of a Farm Bill and, they're just going to vote on it. There's a lot that goes into that. Once a Farm Bill's passed, you're working on the next one.
Mm-hmm.
Yeah, I think a common misconception is that you show up for a Farm Bill 2 months before it happens. Heather, when you were on the Ag Committee for ABA in 2019,
Yep.
Right?
Yeah, that's when I was chair, was 2019, 2020. So right in the middle of COVID.
Yeah, a lot of fun stuff went down in that time period. But some of the things we were talking about then are now getting into this Farm Bill. Mm-hmm. The biggest being the guaranteed loan increases. So Heather mentioned they're at 2.236 million right now. One thing that's happened in this Farm Bill, in the House Farm, and we got to be clear, folks, there is a Farm Bill that went through the House Ag Committee. The Senate hasn't released legislation yet. So we're kind of working with a Farm Bill does exist, but not on both sides. And, we can get into civics lessons if we want on that, but that's a whole process in itself. But on the House side, it increased the guaranteed loan program on farm ownership to 3.5 million. That's a big jump. It's actually the jump we asked for 10 years ago. And then we got halfway there 5 years ago. and everybody's continuing to see that it needs to get to these higher levels, right? On the operating loan side, it's 3 million. And I'm confident that will be in both the House and Senate versions because it's based on legislation that already exists in Congress. So they just took that legislation and put it into the Farm Bill. Part of where that came from was bankers and farm credit and credit unions advocating for these increases for the last 5 years. Those of you who've been around us long enough know there's interesting relationships between all of those groups, but we're all on the same page as far as moving guaranteed loans forward. Why? Because we start to run into the limits all the time. And we view the programs really not as a end all be all, but rather the peaks and valleys of agriculture. Let's use these programs as bridges over the valleys, right? So you never go too far down. We don't want you going too high up. Well, we do. We all want you to be profitable, let's be honest, but you don't want it to go crazy either. Ask our Midwesterners how that's going when you have $8 corn and now it's $4. But when you start looking at those bridges, guaranteed loans make a lot of sense. The other thing Heather mentioned was the beginning farmer side. And I don't know how many people are aware of some of the issues in the beginning farmer program. So the beginning farmer programs are great. It's a great tool. 95% guarantee, which means the risk really gets mitigated. It's a great way to get into agriculture, all those things. The problem is it's much easier to use beginning farmer programs if you're a son or daughter of a farmer. It's a lot harder if you're a niece or nephew, which is a little ridiculous, right? Even harder than that if you're a mentor-mentee relationship. So one thing we pushed for, and again, farm credit, bankers, and USDA working together to rewrite the beginning farmer eligibility, essentially. We're trying to make it easier to use the programs and get more people into agriculture. We as bankers want you to come in as a beginning farmer and then be a customer of ours for hopefully 60, 70, 80 years, however long you get to walk this earth, right? So at the end of the day, we want to make sure you can get in. But if you're not eligible, it's really hard to get into agriculture. It's already hard enough. So we really worked a lot on this farm bill to make the eligibility a lot better and a lot more palatable to a lot of folks. And I think we got there, and that's why we're pushing so hard to get this farm bill through. We have really good things on the credit side that are going to help folks immediately. And Heather talks about running up on a limit in Montana. I have a banker in Alabama that's run into the same issue, and another banker in Ohio that's run into the same issue. This is not just a regional issue. Credit and access to credit is a nationwide thing, and farmers and ranchers need all the help they can get.
You know, you mentioned that the beginning farmer and rancher programs. It's been interesting, Heather, attending some of those Montana stock grower producer profitability listening sessions this past spring, because there was a lot of young producers that attended those meetings that have heard horror stories from their friends, relatives, or even themselves of going through FSA, paperwork that goes through it, tying up of assets, the check goes right to, FSA or the bank. I mean, and again, that could just be some people complaining. I don't know. But one of the things, obviously, one of the questions that I was always getting asked is, what is the definition of a beginning farmer or rancher? Is it someone in their 20s or 30s, or is it someone that's retired and coming back? And I know I'm concerned with things too, as I've been technically a rancher since I could sell my calves with my brand too. I believe I'm timed out on some of these qualifications and whatnot, even though it's not my main job. I always joke I'm a broke rancher that talks for a living to pay for his cows. But I'm not saying anything that I'm saying right now. I could be totally wrong in some of these assumptions and too, but obviously it's important to try to address those. And I guess, what are some of those other changes on that beginning of farmer rancher front, Heather, Ed? Because again, I'm still a young guy, even though I got gray hair coming in now. And what are some of those other things on that young farmer rancher front?
I think with the updates, they're changing the definition and the experience level needed. Previously, you had to have a certain number of tax returns filed. from the new releases just this week that they had, that experience level is going to be reduced. Beginning farm and rancher isn't an age thing, it's an experience level. So it could be somebody who's retired from their day job wanting to go back into farming or go into farming and ranching. They're technically a beginning farmer, even if they are older, because of their experience level. So with these enhancements to the Farm Bill, we can help more people with that definition. It makes it a little bit easier. They've also changed some of the requirements on the financial and production management, looking more at the mentor-mentee instead of like a family relationship, again, to keep more people in farming and ranching.
Great.
Yeah, one of the biggest things was, for the longest time, it was 3 years of experience. 3 years of experience. And there were ways around that. I mean, if you're a veteran, you were automatically waived. If you were some other definitions, you could be automatically waived. But they've knocked that down to 1 year, which is still, to be honest, folks, we believe lenders should be able to determine if somebody is eligible to be a beginning farmer or not, right? Like, that's part of our jobs. But at least we got it knocked down to 1 year rather than 3, which is helpful. And that alone is going to bring more people in. The other thing that I'm looking at a lot is this 10-year window that exists. And the 10-year window is problematic. And that's, Lane, what I think you're getting at,
Yep.
right?
Yep.
So you sell a cow when you're 19, and now you don't need a beginning farmer loan again until you're 30, but you've timed out. And it makes no sense whatsoever. So one thing we've actually talked to different folks about is maybe it bites at the apple. And we haven't gotten there yet. We haven't figured out exactly what that number is. But let's say you use the program 10 times rather than 10 consecutive years, right? Because we're going to have some producers, and as we get into downturn in the ag economy that's potentially happening, and some of you don't feel bad about your corn and soybean friends in Iowa, but they might be in a rough spot here over the next couple of years. You might have folks walking into FSA offices that haven't walked into an FSA office in a long time. And we need to have eligibility set up in a way that they can take a bite at the apple, maybe for just a year if they need to, just to carry them through. They're not bad operators. They're not bad producers. They might have just run into a bad 2-year stretch. Take into account our corn folks, right? If you had 100,000 bushels of corn sitting in a grain bin, which is not that unusual for a lot of farmers in the Midwest, your equity went from 600,000 to 400,000 just because the markets dropped. And those markets didn't drop because you did something wrong. They dropped. Actually, I'm still trying to wrap my head around some of the price drops because, jokingly in Iowa, they're spraying beans with boats right now, right? Like half the state was underwater, but somehow the yields went up. We could spend an hour on WASD, but I'm going to hold back from that. So when you start looking at these things, we got to have lending tools that work for the changes in the ag economy that occur. It's a natural cycles of agriculture. It really is.
Yeah, dang 4-H and FFA making you keep records and file your taxes and time you out there after 10 years. Gosh darn. Yeah. Again, I think we could. I'd love to expand on the beginning farmer rancher and just FSA programs. I think that could be a totally different conversation. But bringing it back to maybe some of the changes to ag lenders. I'm seeing an acronym ACRE. What is ACRE, and what are some of the proposed changes on that front?
I'll fire in here. It's the Access to Credit for Your Rural Economy Act. But in DC, we got to change everything to an acronym. So we went with ACRE. We figured that was a pretty snazzy one that everyone could remember. The ACRE Act, essentially what it does is it's going to lower your interest rate costs. Interest rates are a combination. The banker's going to get mad at me here because I'm in a 30,000-foot view this thing. But interest rates are a combination of risk and cost. Okay. On your risk side, you can do things like get a guaranteed loan, make sure you pay your bills on time, get a better credit score. That's all risk related. And risk, there's only so much you can do. There really is. On the cost side, a bank is like any business. We've got to have a building. That costs money. We got to have employees. That costs money. And then we got to pay our taxes. Our taxes are 21% federally. It's one of the highest tax rates that exists around anything from a corporate side. So what Acre does is it removes the taxation that happens on income you earn from interest. So it's a pretty long line there. On farm real estate, ranch land, rural housing, and aquaculture. Okay, so essentially what you're doing is you're lowering interest rates by removing part of the cost. And then Acre actually levels us out with other competitors in lending that already have that tax break. So what you're essentially doing is putting all lenders on the same taxation level, which is going to create more competition, which for all of our folks out there in agriculture, what's one thing we love? We love us some competition, right? People competing for your business. This will make banks better able to compete for your business on farm real estate, rural housing, and aquaculture.
So Heather, when you're sharing, the work that ABA is doing and the input from producers, especially on something like that, when you can have a competitive rate and folks can shop around if they need to, but what is that conversation like when you're sharing? When a customer comes in, you're not just giving them a loan or working with them, but you're actually advocating for them out in DC as well.
We are, and that's been one of the best things of serving on the Ag and Rural Bankers Committee is I get to share what's going on in Montana and what our farmers and ranchers are experiencing here. I get to share it on a national level. It's one thing I learned on this committee is though agriculture at details is different across the countryside, ag lending is pretty much the same, though we're dealing with different commodities. But it was really good to get the Montana point of view on a national perspective. So when things like Acre or working on farm bills, or when we were going through COVID and all those different programs that came out, our producers here in Montana that I worked with during that time and still work with now actually appreciate that I had a voice and that I could help them on a national level, not just here at the desk on a loan perspective or in the community as well.
And I should mention Acre really comes from our bankers who are hearing from their customers, right? I mean, we don't come up with anything in a vacuum, right? It's always coming from our customers up, our banks up, our grassroots levels up. And Acre, to me, makes a lot of sense because it's half of the equation. Farm Bill is one half of the equation, right? Make sure you're covered on risk management, make sure that you have loan programs, all those tools. Acre becomes the other half of that toolbox. So if you're a beginning farmer, for example, you take the beginning farmer program, get the eligibility right, get the years right, and then you start to combine that guaranteed loan with an Acre interest rate reduction. All of a sudden, a beginning farmer is paying a couple $100 less a month in interest right off the bat. And I don't know about what some of your friends look like, but a couple $100 in interest can make or break farmers, especially on beginning farmer side. My family I had cousins that went through that and literally couldn't figure out how to make $100 more a month, right? So when you start to talk about where those breaks are, where those cash flows are, anything we can do to create solutions should be on the table. And like I say, Farm Bill and Acre put two solutions on the table to get done to help producers. At the end of the day, we want to help producers. And I need to be careful how I say this about rate shopping because I don't want Heather to have any customers bailing out of her bank. But like at the end of the day, you should be able to walk into different institutions and have those conversations and see where people are. And if you're not competitive or not able to be competitive because of the rules that exist, that's a bad thing. It really is. We want farmers to have as much competition for their borrowing as possible. So that's why we're pushing this thing so hard. And I will tell you, like the Elfmann operation, we get Acre done. First thing we're doing is going to our small local bank, our regional bank. I hate to say the other guys, and we're going to say, where are we at across the board? What does it look like? And have those conversations.
Now, obviously, there's so many different programs in a farm bill, and adjustments are always made. People advocate to improve programs, make some changes for eligibility. And Heather, from your perspective, risk management, it just seems that risk management conversations are pretty new as they've moved from the Midwest up here into the northern plains, Rocky Mountain West, and we think of terms like LRP, livestock risk protection, pasture rangeland forage, other cropping or livestock protection risk management strategies. When we look at LRP as a lender, how does having an LRP impact a lender's decision in helping maybe a producer expand or buy some cattle, buy some heifers, or buy those calves, or just looking at what that may be? How does that change the conversation when producers are looking at some of these risk management tools and thus giving some more assurance on both sides?
So from a lending perspective, we always enjoy risk management or risk mitigation, because then we are able to lend more to the customer because there's usually something in the operation, maybe leverage or debt coverage isn't as high, or maybe the price drops on cattle and you don't have them protected. So having those risk mitigation strategies in place, whether it's marketing, LRP, using puts on something, it really helps the overall customer. And then as a bank, making the decision to, yes, we are going to lend to this customer because they already have these things in place as part of their whole business strategy. I think that's one thing that we've also seen over the past few years is it's become more of a business strategy with lots of different pieces and parts to it, not just I'm going to take my calves to the yards in the fall. There's a whole lot more to it now than it was when my parents were farming and ranching. You have to be up on a lot more things, always looking for changing, always learning to stay productive and profitable throughout the times. So the risk mitigation is a big part of that.
And
So, Ed, what are we seeing in the creation of that House bill that got released, and then rumors around what the Senate bill may look like, and even if we even push forward the similar bills here this year, maybe pushing it into next year on some of those risk management, conservation, just any of those important key aspects of the Farm Bill that impact lending?
Yeah, so let's start with conservation and risk management. Both programs are being plussed up. There's going to be more money put into the programs. That's actually part of the politics of why the farm bills had a hard time getting through the process, is because they are increasing the monies to a lot of these things. They're trying to get more folks to get into the insurance pool, right? And that's always, at the end of the day, whether it's your dairy programs or your crop insurance programs, they want them as expansive and as wide as possible because, well, folks who work in insurance know this. The more in the pool, the less risk for the pool, right, across the board. So they're trying to open up abilities to get into that. I believe PRF is actually plussed up a little bit in the Farm Bill. That's a program that I think is getting a lot more attention than it used to. Part of that is the payouts that occur in Oklahoma and some other places. People realize that it is a good program if you use it correctly. It's one of those programs, though, I'm going to tell folks, it's not a year-to-year thing. You might have to be in it for 5 to 7 years until you see the payout. When the payout happens, it's going to cover all your losses. But after 3 years, you might be going, why am I still in this thing? I haven't gotten anything back. Well, in reality, it's set up for when you do have that disaster, right? When things don't go right. So that's a good example of a program that's been modified and changed, and I think positively, because you'll see more eligibility there. The other thing that really is a focus on the insurance risk side of the world in this Farm Bill is getting beginning farmers more eligibility. There's always been issues with beginning farmers as far as how many base acres do you have and how much land do you actually own, and et cetera, and trying to make sure that when you sign up for the program that it covers where you're going, not where you are right now. And they're doing a better job of trying to set it up for the beginning side, trying to lower costs for beginning farmers. And we talked earlier about what beginning farmer eligibility is. That can be a little bit of an issue, if we base it on age or other things. But really, they're trying to make sure that folks can get into the programs and actually use them. From a lender's perspective, we love us some risk management. It just makes our lives a lot better. It makes your lives a lot better. I think farmers and ranchers don't realize how much it affects your interest rate by having risk management versus not having it. It can really change a lot. We're not necessarily going to require you to have it. We're just going to highly suggest that you have it. And with that, it makes sure that everybody's protected across the board.
So, Ed, what are you hearing? Obviously, Congress is on recess. We have an election coming up in November. Any chance that the Senate will put forward their bill? And do you think a lame duck bill could possibly come through on the farm bill? Or are we just going to see an extension of that 2018 bill for a few more months or another year?
Now I'm on the hot seat with what I'm actually seeing going on. I do know that Chairman Thompson is talking to members of Congress on the House floor, trying to whip their votes, essentially, to get them on board with the Farm Bill. One of the big problems you have with the Farm Bill, and don't ever forget this, folks, there are about 175 rural districts in the United States now. You need 218 to pass anything, okay? So right there, we're at negative 40, 45, something like that. So you have to have the nutrition side to help bring in folks who might not care about commodity programs. For example, on the House Agriculture Committee, there's a member of Congress who represents downtown Chicago. Commodity programs are not a big part of what they do. You'd be shocked, they don't farm much in downtown Chicago. But when you start to look at the nutrition side, the trade side, that you start to have things that they can support, right? So on the House side, that's the challenge right now, is getting those other 40 votes. And there were some things that were changed in the nutrition programs that pushed the Democratic side of the aisle away. I'm hoping they come back, or they come back with maybe some suggested amendments. That's a big thing right now. Come back with your ideas, right? So that's the House side. The Senate side is a whole nother beast. There are two frameworks in the Senate, and one is Republican and one is Democrat. The Republican framework looks a lot, it's not actual legislative text, but it's just, ideas and one-pagers and all that. Looks a lot like the House bill, which includes higher reference prices for different commodities, which has some cuts to the nutrition program. And I don't know if cut's the right term, it's some reforming and moving some monies around. On the Democratic side, they put out a framework as well that wouldn't have the reference price increases and then wouldn't have the same cuts in nutrition. My personal belief is what's happening is they can't figure out how to make the dollars work. They were told they can spend X number of dollars, and they can't figure out a way to get it under that threshold. Because you got to come up with something called pay-fors. You got to pay for the bill. So where do those pay-fors come from? And that's why I believe the Senate hasn't put out legislation yet, is because they don't quite have a way to get the text out there with all the pay-fors they need. And that was some of the criticism of the House side. The House side, they said they would be able to save X number of dollars. CBO comes back with the Congressional Budget Office, which is a nonpartisan deal that figures out how much stuff costs, came back with a score and said, you guys didn't hit this right. So now you have two versions of the Farm Bill, the House and Senate versions, and neither of them are going to be able to make it work under the dollars. Well, why is that? One thing, everything costs more, just the nature of inflation the last few years, right? So when you take that all into account, you don't quite have it there. So I've gone a long way around and still haven't answered your question, Lane, and I'm going to get to it right now. My best estimate is that we're going to end up with an extension, probably in the lame duck, okay? Likely a 1-year extension. So we'll be in year 7 of our 5-year farm bill because it works. We want the changes that are being suggested in the farm bill. We need some of the changes for risk management. But that being said, the current farm bill is our best worst case scenario because it works. It does provide risk management. The lending programs are great. We'd obviously like to see them bigger, right? For all the reasons we discussed earlier. But if we're stuck at the current level, only being increased by inflation, we'll probably be close to 2.4, 2.5 million after a year. We can still work with those numbers. It's not ideal, but we can work with those. So I'm thinking we're going to be in an extension, probably 1 year through September. Folks, if one doesn't happen in September, don't freak out on an extension. It really doesn't have to happen until about December, well, December 31st, frankly. And it needs to happen by then. Otherwise, loan programs start to get really messed up in the beginning of next year. So, and farm decisions and all those things all are affected if you don't have one done by December 31st. But if it's not done by September 30, it's not the end of the world. We can go a couple months not having a true farm bill in place. Things won't fall apart. And we've done that 3-4 times already, frankly. Lame duck, this is the last thing I'll say on all of it. If the parties flip, if the House and Senate flip leadership, don't ever forget there is politics behind politics, folks. There's reasons to not do a farm bill if you're on one party. There's reasons to do it if you're on the other side. We could potentially see a farm bill try to push through in the lame duck. I think this is like a less than 5% chance of happening. And it would have to be the parties have flipped severely and the current stakeholders want to get their version through as fast as possible, right? Like take a scenario of the Senate is going to flip Republican and the House is going to flip Democrat. Well, then Chairman Thompson will want to get his farm bill done and hopefully has enough folks on the other side to help him with it. That the chances of that are not great. I really don't see that happening. I think we end up in an extension world. I really do, which is unfortunate because the farm bill that was put through the House has a lot of great things in it. It really does. It will be a great bill for farmers and ranchers.
Well, again, there is a lot going to happen over the next few months, no doubt. I think we've had a great conversation and a lot of work going on out in Washington, D.C. I just want to give both of you the opportunity to share some final thoughts before I let you get back to your day. Heather, any last thoughts?
Just thanks for the time today. It was great to visit with you guys, and we want to keep ag producers producing and ag lenders lending.
Very good. Ed?
Thanks for having us on, first of all. But secondly, going back to the Acre Act, farmers and ranchers, we need you to advocate for that legislation as well. I don't know any of you that would not want lower interest rates. Everybody wants lower costs, right? But we need you all to voice your opinion. Senator Tester is on the bill on the Senate side, which is great. We'd like to see more folks get on, obviously. But I'm almost talking to you less about working your members of Congress and more about talking to your agricultural groups, okay? Because if agricultural groups support getting Acre through, it's much more likely to happen. If you want more information, go to aba.com/Acre Toolkit. We've got economic analysis. We've got basically a letter you can write to your member of Congress. Resolutions you can put forward in front of your different agricultural groups. I should mention Montana Farm Bureau was supportive of Acre during the American Farm Bureau meeting last year. We're hoping we have them again this time around. We have a lot of states that are supporting at the state level, and we have national groups that are starting to support Acre. Because I think everybody sees any way to bring down costs is a good idea. And this is a good solution that's out there. So that's my big call to action to all your listeners. Make sure you're talking to your ag groups and making sure they're on board with this information.
Very, very well said. Again, a lot of important issues to keep farmers and ranchers in our rural communities thriving. Of course, included in that and a key part of our operations are having our financial institutions that work with us every single day, not only here in rural America, but out in Washington, D.C. as well. Well, again, I want to thank both Ed and Heather for joining us here today on the Lanecast Ag Podcast, and a shout out to the Bank of the Rockies for bringing you today's conversation. For more information on the oldest bank in Montana and what they can do for farmers and ranchers, or if you're just looking for a lender, check out Bank of the Rockies today. Well, thank you both for joining us, and enjoy your weekend coming up here.
Awesome. Thank you.
Thank you.
With that, friends, thanks for joining us here on the Lanecast Ag Podcast. I'm Lane Nordlund. We'll catch you next time.
Thank you for tuning in to the Lanecast with Talkin' Ag Lane Nordlund. Don't forget to subscribe to the Lanecast on your Apple or Android devices. We look forward to joining you next time on the Lanecast.